Good evening, traders. This is Avinash here. I'm going to be your presenter today. Welcome to another informative session by collaborative traders. Hope everyone is gaining a lot of knowledge from these sessions, and I'm hope that this is helping them in their trading journey. Today, we bring to you another knowledgeable session by not one, not two, but three volunteers, some presenters who've put in a lot of effort over the last 7 to 10 days to understand, prepare, and present, all under the able guidance of Mr. Jagan himself. I don't think collectively we can thank Mr. Jagan enough for all the relentless effort that he's putting in. Now, before we begin, I would like to put up a, small request in front of everybody, a small reminder, so to say. Please fill up the Google Doc form. Now, this is important for you guys because this will give you access to all the database, and through this we'll be sharing the forms as well, sharing the charts as well. Also, at the same time, you need to subscribe to our YouTube channel, our very own YouTube channel for collaborative traders. All the recordings of all the sessions are going to be put up across on this YouTube channel. Now, moving on to our presenter, to our first presenter for the day, we've got Mr. Mahesh. He hails from Hyderabad. Mr. Mahesh, along with Mr. Jagan, has put in a lot of effort for the past 30 days and collected a lot of database in terms of Bank Nifty charts. I'll pass on to Mr. Mahesh now, and he'll take you through. Mr. Mahesh, over to you.
Yeah, good evening, everyone. Am I audible? Avinash, am I audible? Hello.
Yes, audible.
Yeah, thank you. Yeah. I'm Mahesh. Good evening, everybody. I'm going to present the Bank Nifty database. Myself and Jagan working on this. See, what it actually does is, we actually take everyday chart after the end of the day, and we plot the days high, low, and open and close, and previous day high and close. So, and those charts will be uploaded to the Google Sheets every day. And we are even trying to share certain things in the trading view charts and everything. I'm going to explain what exactly we are doing, how we are managing, how it will be useful for you going forward. So, this is a Gmail which was created for the collaborative traders, and in this we are uploading the Bank Nifty spot charts information. So to access this, what you need to do is we will be sharing the link. For now, I'm going to the drive. From the drive, I am accessing the Bank Nifty database, and then I'm opening the Google spreadsheet. Sheets. So how we organize is every day after the end of the day stuff, we prepare a chart which will have this information. I'm showing the trading view first to make you understand. So everyday chart, please make sure, I developed a small indicator. It's a daily study. Once you add that, it will show you all the days high, days low, previous day high, and all the information needed. And this is what you're seeing it. So this is the days high, and this is the day open. This is a day close and days low, and this is the previous day information. We added the week high and week previous day, current week high and low also. So this is how the chart looks like. So what we did is we are preparing these kind of charts every day, and we would be uploading the Google Sheets in a way that we can interpret certain things. So this is how the Google Sheets looks like. It will have Monday. All the Monday charts will have the Monday's column. So if you scroll down, you will see this is the first chart. First chart in the sense we started preparing from the 28th February. This is the first Monday. From week of that Monday, and then you can see the next Monday chart. That means 7/3, and you can see the next Monday chart. So you can even interpret how the Bank Nifty is moving on a day basis. When I say the day, how it is Mondays. Is it gap? I mean, it's a big range, maybe 1,000 points, 1,500. You can see whether it's a trending day on Mondays. You can understand that. So all the Tuesdays will be like this, and you can access the Tuesdays information in one column. And similarly, when you scroll right side, you will have the information of the Wednesdays, and then Thursdays and Fridays. So we organized in a way that at any given point of time, you can see two charts. See, you can see Monday and Tuesday, and also you can see, uh, sorry, and you can see Wednesday and Thursday. If Tuesday was a holiday on 1st of March, it was a Shivaratri, then you can see the Wednesday and Thursday. So you can understand how Wednesday's price was moving and how it opened on Thursday and how it moved on Thursday. So this information you can interpret, and based on that, you can even predict how the Thursday is going to be. I mean, that information will be shared later, how it is. Say, for example, if it is opened at one end, closed at another end, then there may be a gap up, gap down. Then it may either go down based on the previous day's price. I mean, if then it may go and take some support. If you see it here, it took the support of previous day low. See the thing, it came, it started at one end and closed at the other end. Then it opened the gap up and then came to the previous day low, sorry, days ago. And then it, I mean, it is not, we cannot say this one. I mean, if it is previous day, we can understand. But at this point of time, it made some low and then went high. And again, it is coming down. If you see the, when days high, this chart is not giving the picture probably, but what you can understand is how the price moved yesterday and how it is moving today. And based on this interpretation, you can take some decisions how the next day is going to be. That's the purpose of it. Or otherwise, you can just see on Mondays how the Mondays the charts will be. I mean, based on that, you can take some decision or you can interpret. So this is, we are going to maintain this database. We started on 28th and it will continue forever. So right now we have a 30 to 35 days database. Okay, so this is what it is. And basically this one, it takes only 5 minutes or 10 minutes just to view this chart and to understand how the day was. That's the purpose of it. Okay, now I will go a bit internals how these charts are prepared. So this is a trading view. See, this indicator, the Rally study is prepared to show the, it will automatically plots all this information. I mean, days high, days open, days low, days close, and previous day high and low, everything it will automatically plot. What you have to do is, I have not yet published this indicator. I just wrote Pine script, just took the Bank Nifty ticker ID, and I set the time frame as D, and then I'm storing the previous day high, all the information, and just once I store all this information, I'm just plotting it. So that's it. So I'll show you how. I'm just going to remove this one first. So I mean, I'm just removing this one. Now there is nothing. I opened the Bank Nifty 13th one. I made it as a 1-day chart and 1 minute time frame. The indicator works only on the intraday charts. So what you need to do is go to the indicators, and this is not yet published. So I'm just taking this one. So once you add it, see this one, it shows all the information of that day, where it opened, days open. Okay, see, this is days open. So this is day open, and it went up to the previous day high. See, this is previous day high. So if you see previous day high, it went up, but it it took the resistance and then started coming down. So this information will be helpful to take the trading decisions. If it is near to the previous day high, you can verify the other indicators and you can take it. Most of the times, based on certain levels, previous day high, previous day low, it takes either it bounces or it may take the resistance and then comes back. So these are very important levels. You can watch it. So, okay, I just add one more point. Sometimes you may see some disturbance here. See, I have added the indicators. So it might disturb you. Maybe you have to move the chart here and there. So for that, what you can do is, if you do not want to see these things, which are disturbing sometimes, you can go to the settings, and then you can go to the appearance, and not the appearance. Yeah, status line. You can just take the indicator titles out. Okay, you can take the indicator values also out. I mean, you can remove it. So the moment you remove, these things will go away. So you can watch it. I mean, if someone is seeing this data, if it is useful, you can keep it. If you think that is disturbing the chart, you can take them out. So what you need to do is, you need to go to the chart settings. I just open it again. Chart settings. Come to the status line. If you take the indicator titles and the values, it will show you. In case if you do not want them, you can take them out. That's it. So this is how it is. And this indicator works. If you want to see for the previous day, you can just move it. Okay. So it will show you that day stuff. Okay. So you can even choose the stuff. You can choose the dates here. If you want to see specific day stuff. Okay. This is what it is. I'll just written, I believe, in the Pine version 3. Okay, version 3, yes. Okay, so hope this will be useful. I mean, I have some problems in publishing this version 3 script. I have to convert this to the version 4, the version 5 to make it available. I'll try to do this sometime this week, and I'll share it to you. Okay, so this indicator shows you how the price moved on a given day, and how the price takes support and resistance on the next day based on the current day levels. That means day's high. Today's day's high, it becomes a previous day high for tomorrow. So when the price reaches to the previous day high, you may see some support or the resistance. I mean, you may see the resistance, or based on the volume and other indicators, you can see if it's going up, you can think that as a, I mean, after going there, it may take resistance and comes down, or sometimes it may go up. So these levels will help you to take trading decisions, or to calm down when the price reach into these points, and you can think and then take the trading decisions. Yeah. That's it from my side. I mean, if there are any questions, I can cover up, and then I can hand it over to the next presenter, who is Lavanya. Avinash, I'm done from my side.
Thank you so much, Mahesh. From the audience, any questions? We will take it after Lavanya. Lavanya, who's the next presenter. So now we'll move on to Lavanya. Lavanya, a little bit about her. She's a graduate in pharmacy, and she's worked alongside with Mr. Jagan again. She's her topic for the day. She's going to be taking over from Mahesh only, and she's going to be talking about the topic in terms of market structure and stuff. So off to you, Lavanya.
Yeah,
Lavanya, you
Avinash,
yeah.
Avinash.
Yeah,
Avinash, 1 minute.
Yeah,
1 minute. Yeah, I'm sorry for that. Hey, whatever I presented now, market has the memory how these levels will work out for the next day or previous, I mean, next to day.
Yeah.
And how we interpret this data will be, I mean, how these levels will be remembered by the market will be explained by the Lavanya. It is an extension from this presentation.
From this presentation on. Yeah. Thank you for clarifying, Mahesh. Lavanya, you there?
Yeah. Thank you, Mr. Mahesh, for explaining the
share your screen, Lavanya.
Yeah. Please confirm, can you see my screen? And my voice is clear and loud
enough?
enough?
Yes, Lavanya.
Yeah. Thank you, Avinash. Thank you, Mr. Mahesh, for explaining the database. Good evening, everyone. I'm Lavanya. I have been into trading past 1 year. Basically, I'm an option seller and a budding option buyer, I can say, trying out small with the help of Collaborative Traders Group. Now, let me take my part in explaining the necessity of maintaining a database. Firstly, let me ask you one simple question. Do you remember what you did yesterday? I know most of us remember this, right? What about last week? Feeling little fuzzy and only basic details we can remember, right? Then can you tell me what about your 15th birthday? I think most of us looking blank. Everyone is feeling like Gajini, right? Now, let me tell you that markets too have a memory like us. Of course, it has a better memory than us. Yes, what you heard is right. Let me tell you, human brains never change. It doesn't change its reaction to certain impacts. Like we always smile when we are happy. Like when we go for a movie and watch a comedy scene, will we cry? No, right? If we do that, people will definitely look as if we are mad. So this unchangeable behavior causes the recurrence of past patterns. This we can say as the reflection of human brain. Then history repeats. History repeats and forms the similar patterns of the past. How we can say with the help of this database? Here in this database, we can record all Mondays, Tuesdays, like day-wise data can be recorded in columns. At one glance, we can clearly be able to understand the market behavior on particular days, how it is behaving, like the high, low, and close, everything is marked out. Like we humans tend to behave differently on different days. What I do is from Monday to Friday, it was a daily routine for me. So my behavior is different when it comes to Saturday and Sunday. I need not wake up so early, packing bags and lunch boxes, all these hyperspeed things, I can avoid it, right? I can do it aram say on Saturdays and Sundays. Of course, I will get back my routine fever by Sunday night. That's a different story. Same way, even markets tend to behave differently on different days. So this database helps us to understand easily with one glance at that one which days market behaves like what. Like many people say that most of the Fridays it's a range bound, most Wednesdays are trending, and of course mostly Tuesdays are boring. This behavior of markets even have impact on option value. Shall we look into that? Options are designed in such a way that on expiry, the option will be with intrinsic value or it finally becomes zero. Let's look into the life cycle of the option. I have found this on Twitter and seems to be quite interesting and thought to share with you all. Like a weekly options life is basically 5 days, from Friday to Thursday. Let's relate this to a human life cycle. When it comes to Friday, it is the first day of the cycle, and the option behaves like a newborn unless there is a large one-sided move. Option premium doesn't lose much value. Like, let me tell you, being an option seller, how pathetic it can be trading on Fridays, because the depreciation in option premium is very, very less, and it's hard to make money as sellers. Then when it comes to Monday, now options become an youngster. It is full of energy. It will be moving where the market moves, trying to find its direction in life. This day acts as big deciding factor in the life cycle of the option. Then when coming to Tuesday, now the option enters into adulthood, full of responsibility and accountability. Some make it to heights while the rest get left behind. Similarly, on Tuesdays, either the option runs in a direction and attains new heights or will start to get loose. So on Wednesdays, this is the most favorite day for the option sellers. I can tell that. Now option entered into old age, the option loses maximum value on this day, mostly moving towards its final stages. From 3 p.m. onwards, option tends to lose its value much more faster. Then finally, the day comes Thursday, the expiry day, the day of the ultimate truth. Like we humans, even options have to die. Some will leave a legacy behind, while the majority will become dust. Like it will go to zero or be at the intrinsic value at the expiry. So far, we have discussed about the patterns for shorter time periods. Now, just a minute. Now let's dive into some more like what's the impact of events and long-term memory of the markets. When you see this chart, for example, when we take the Feb 10, 2022 RBI policy with the unchanged repo rate, how the market move, we can see in this, the top chart. We can see the similar kind of move it also made on the below chart, which is the same outcome of the RBI policy on April 8th, 2022, with the same unchanged repo rates. You can see in the below chart. So this can tell that even markets have memory for the events too, and we can interpret the next upcoming events with the past history in the historical data present in the database we maintain. And next comes the déjà vu. Many of you might have heard this French word, which actually means a feeling of already experienced the present situation. Many times we have faced this, right? I know most of you have faced this. This we experience in the market chart patterns too. If we look at this chart, the pattern formed during the Feb 2021, when you see keenly, it formed a similar pattern on Feb 2022 also. We can see clearly how market moved after the first pattern. It moved down, right? It moved down. And in the same way, after forming the pattern on Feb 2022 also, it has moved the same way. This will clearly show that market is having a memory. Then when we look further and go to the resistance and support zones, when the price reaches these levels, even after 6 months or 1 month or 2 weeks or few days, history can be like the past can be in any time frame, right? Then whenever, whatever it may be, market memorizes these levels even after a long-term period or short-term period and shows a similar impact. This can give you an example, like here in the Bank Nifty chart, we can clearly see how the support is respected, like on July 27th, and the same level where it reached on November 29th, it reacted the same. It took the support and the market went up. And similarly, you can see on the May 4th, 2021 also. So the range is so big, even then the price came to this level, it reacted the same. So on March 8th also, it has bounced back and the support region is well respected. This also shows that market has a good memory of the past. And if we take in this right-hand side HDFC Bank chart, when the price reached this level, we can see that is well respected here also. On October 14, 2021, it has tested this resistance and gave a good move downside. And after that period of time, on April 4, 2022, it again reached the same level and it is well respected. And the same impact which it came on the October 14, 2021, it has the same impact when it reached on April 4, 2022. From all this, it is proven that market has memory. And now let's come to the benefits of post-market analysis. With all this database recorded data, we have to learn something from it, right? So the traders who ignore history will repeat the same previous mistakes. This database makes us to avoid the past mistakes so that we can have a better interpretation of markets, what's happening next and all. With this history, we can estimate the market better, which can increase our conviction on trades. So I would like to suggest everyone to spend at least 15 minutes after market hours to record what has happened on that particular day with, if necessary, with the comment along with the database which was shown by Mr. Mahesh. It was recorded with the previous day high, low and everything. You can also comment with the text box. You can go to the trading view and open the text column and just enter your inference in case of any events that impacted market that day. It will really help you. Like actually in the initial days, it will take 15 minutes to analyze, to write and everything. Believe me, that 15 minutes can easily come down to 5 minutes days passing by. So please practice this for sure. This will give us some greater benefits in trading and helps you grow. Then let me add another note. Actually, many are posting some doubts in the Telegram. So I would suggest what I'm doing, like analyze your trades so that the self-retrospective learning from mistakes makes you grow better. Like first, if you analyze your trades yourself, it will be your lesson. So if it is a failure trade, you have paid an amount of fee to the market, right? If you pay and don't learn anything, it will go for a waste. Then I suggest that if we learn from a failure trades, it will have a greater impact. So the best trading plan is built by analyzing your mistakes and turning them into positive actionable steps. And and this market structure can be explained further in details by Mr. Palani sir in the coming thing. So I would like to thank Mr. Jagan sir for giving me this opportunity to share my knowledge regarding this topic. Thank you. And I'm over, Mr. Avinash.
Thank you so much, Lavanya.
Yeah.
From the audience, if there's any question, you could post it in the chat room. We'll pick it up from there.
Okay.
Thank you, Lavanya, for explaining the importance of the historic data.
Thank
and
you.
I would urge everybody, to start spending some time post-market hours and, recording your own data and, so that it becomes helpful for your trading sessions. Now, next we move on to Mr. Rishikesh. Rishikesh is from Jalna, Maharashtra, Jalgaon, Maharashtra, and he's a MSc in physics. He'll be taking us through CT 1.1 and CT 1.2. Mr. Rishikesh, over to you. You could share your screen.
Yes, thank you, Avinash.
You're welcome, Rishikesh.
Let me share the screen.
Till the time Rishikesh shares his screen, a gentle reminder to everybody that you've got to fill up the Google Docs form and you've got to subscribe to the YouTube channel so that you have access.
Sir, have you enabled the screen sharing for the participants?
Yes, 1 second. Just hold on. There you go, Rishikesh.
Okay, thank you.
Yeah, in the meanwhile, like I said, reminder to everybody, please fill up the Google Docs form.
Okay.
Thank you, Rishikesh. Over to you.
So, am I audible to all?
Yes, you are.
And can you see the screen?
Yes.
Okay. So, good evening all. I'm Rishikesh, and today I'm going to explain the chart layouts 1.1 and 1.2. So, first thing, let me tell you that the chart 1.1 has been revised by the Mr. Jagan sir, and he removed some of the indicators and added some new indicators. So let's begin with the chart layout 1.1 first. So chart 1.1 looks like this, as you can see on my screen. So second, yes. So the candle type is used in chart 1.1 is Heikin Ashi, and time frame is 5 minutes. So it has the 4 indicators, namely V-stop, volatility stop, MAMA, WAPI, and VMC cipher B divergence, and the Harshi, Heikin Ashi RSI. So we will see one by one indicator. So let's first see the V-stop MTF. So let me hide the other indicator. So V-stop indicator is look like as. So first thing about this indicator is we should use this indicator for exiting the trade. We should not enter the trade using this indicator. We should use this for exiting the trade. So volatility, it is a V-stop. It is called as a volatility stop. It is a volatility indicator. It is based on ATR. So as we know that it is one of the best measure for the volatility. The volatility stop takes a multiple of the ATR and place the stop at that price. So it takes a multiple of ATR, and we can decide that multiple. Here we have taken the multiple of 3. So it is 3. So Jagan sir has fine-tuned these indicators, and I suggest please do not change the input values. So volatility indicators also helps to identify the current trend. So this indicator plots the red line above the price bar if the current trend is downtrend, and the blue line below the price bar if the uptrend is detected. So you can see that like this. So when we enter the trade, we can place a trailing stop loss at this price levels, at the volatility stop price levels. Then these lines are commonly used for trailing stop loss. And when price crosses the this V stop, then it the trend reverse, and V stop moves to the another direction. As you can see here, here it breaches the V stop, and the V stop shift to the other side. That is, it becomes a uptrend now. So this is all about the V stop indicator. So I will again say that we should use as for exiting the current trade. So many times trader prematurely exit their position, or sometimes they do not exit the trade and lose big. So this will help for a better exit. I will not say that it will be a perfect exit, but it will be a better exit. So the next indicator is MAMA. It is called as a moving average momentum adjusted moving average. No, momentum adjusted moving average, sorry. So it is advanced form of the moving average. Basically it is calculated by considering moving average as well as the momentum plus acceleration, that is a rate of change of momentum, and the plus the probability, that is a market psychology. So it becomes an advanced form of the moving average. So when the price trading above the this indicator, it is showing a bullish trend, and this can be confirmed by the red color of the indicator. Similarly, if it is trading below this indicator, it shows a bearish trend, and this can be confirmed by using this by the red color of the indicator. So it is easy to interpret, and This provides, since it considers many factors like momentum, acceleration, and probability, it provides a faster response compared to the regular moving average. So that's all about this indicator. So next we have a WAPI. It is called as volume accumulation percentage indicator. So let me zoom it. So it looks like this. So it is a volume indicator. It uses the volume the same way as the on balance volume. Actually, I think the OBV indicator we have seen in the last session. So the difference between the OBV and this indicator is it gives the weightage on the volume. It assigns a volume weight to the indicator on the based on the intraday volatility. So it gives the better result than the OBV indicator. So generally this indicator follows the price action. Like if the price is moving up, and this indicator will move up. So as long as this is price and the indicator are in agreement, the current trend is expected to be continued. So here you can say that as here price is price is increasing, and the indicator is also at its highest position. So current bullish trend is expected to be continued. Similarly, if the price is decreasing and the WAPI is also decreasing, then it is expected that the bearish trends will be continued. The divergence of this indicator will also effective and provides a better trading opportunities. So in the divergence, suppose a price is trading at the bottom of the current trading range, and the WAPI is sloping above, then there is accumulation of the stock, and price should go up. So let me show one of the example. Okay, let me finish the first, then I will show you the example. So similarly, when price is trading at the top of its trading range, and the indicator is sloping down, it shows that there is a distribution of the stock, and price is expected to fall down. So next indicator is VMC cipher divergence. Let me zoom it. So it looks like this. VMC cipher is a combination of various indicators. It includes RSI, market volume, money flow, momentum, etc. This is consist of many many indicators. You can see in the settings. It has a money flow, then wave trend, then VWAP, RSI plus money flow, divergence, there is divergence, bullish divergence, then stochastic divergence. So this is the quite complicated, but it gives the useful results. So let me explain. I will not go much detail in this indicator, but I will explain the some of the important points of this indicator. So first thing is made up of a different wavy lines that indicates the amount of volume, also the inflow outflow of the money that is entering the stock. It has a red and green dots that used to identify when the market is bullish and bearish. So the first thing to highlight here is the wave trend oscillator. You can see here this light blue and the dark blue. This indicator can be identified two lines which are made up of light and dark wavy lines, which oscillate above and below the zero line. This is the zero line, this one, or you can say the midline. So these lines can signal a change of trend and also confirm the emergence of new trend when they make a crossover. You can see these lines are making a crossover here, and it is confirmed by this red dot, which signals the sell signal. Similarly, here you can say the crossover of this wave trend indicator, and it verified confirmed by this green dot, which indicates the bullish signal. So next thing is money flow. This red and green wavy lines are indicates the money flow. The red wavy lines, this one, are indicates that the money is flowing out of the asset or the stock. So we can see that the money is coming out of that stock and it is expected to fall. Similarly, if the wavy lines are these green wavy lines above the zero line or zero level, it indicates the money is flowing in the asset or stock, or it is a bullish signal. So then we have this money flow bar. It is nothing but it represents the same thing. That is, if it is red, then it will show here a red bar, and if it is a green, then it will show green bar. Then let's move to the chart 1.2 now. 1.2 left. So chart 1.2 has a time frame.
Rishikesh, sorry to interrupt.
Yes,
Have
sir.
you explained HARSI on the top?
Oh, sorry, sir. So we have another indicator I have forgot. Sorry for this. We have the HARSI. So all indicators are important, but this one is very important, and we should keep an eye on this indicator for every moment. So it is a Heikin-Ashi candles in the format of the oscillator form. So it is just like a normal RSI, but the thing is it filters out the noise that we see the normal RSI. So it gives the better signals than the normal RSI. And the general rule is that if it is crossing the zero line, this is the mid line, zero line. If it is crossing zero line from the above to downside, then it signals a bearish, it's bearish signal. And if it is crossing above the zero line, then it's a bullish sign. Okay. As you can see here are many signals that this is the signal. Here line crossing up, and the stock is also price is also going up. So it is the most important indicator you should keep. So I think we have covered all the indicators on 1.1. So let's move to the 1.2. So in the 1.2 we have the five indicators, sorry, and the time frame is 5 minutes, and chart candle type is also Heikin Ashi. So the first indicator is the volume profile. So we will see. So it volume profile looks like this. So in the we have seen the volume bars on plotted vertically on the time axis, but in the volume profile we have the volume bars plotted horizontally on the price axis. So it shows the in the normal volume, it shows the volume traded at that interval of the time. But in the volume profile, it volume bars, it shows the it shows the price volume traded at that price level. So volume profile shows the price where the most volume is traded. You can see that different volume traded at different price level. So from this volume profile, you can get the idea how are market participant reacting on different price levels. So be it at you have heard some important levels like round figure levels. So you can visually see the how are the participants reacting, whether they are bullish or bearish or that price level. So it is very powerful and advanced advanced level charting study and indicator. So we will study some terminologies of the volume profile indicator. So this blue color, it shows the up volume, and this yellow color shows the down volume. And let me go to the whiteboard, please. So this looks like I have taken the picture of the volume traded. So the first thing is high volume nodes. So the nodes at which really high volume are trading than average are called as high volume nodes. So you can see here, this can be a high volume node. These are the high volume nodes. So the next one is a low volume nodes. So the price level at which the volume traded is really low than the average average volume. It called as a low volume nodes. You can see here that low volume nodes. So then we have the value area. So 70% value area is nothing but the 70% of the volume that locates here. So this is the value area. So here the 70% of volume exists. So this is called a value area, VA. Then we have a point of control, a very important concept. The point of control is the this is the highest volume node that exists on the volume profile. So this on this chart, this is the price level at which the highest volume level, highest volume is traded. So this is the very important price level, and this line has act as a support at resistance for the session, current session, as well as the next session also. So we will go back to the so we have two more terminologies. The value area high. So the highest point of the value area is called a value area high. Value area high, and the lowest point of the value area is called as uh, value area low. These are the terminologies we should know about the volume profile. So this is the point of control, POC. It is called as POC, and it is important level, and it is act as support and resistance. So we'll back to the trading view. So the POC, the point of control, is extended towards the right. So you can see that it is extended towards the right. So it will extend until it will retest again. So here you can see that here the point for this session, this is the point of control, and it is retest by first minute. So it will not extend further, so it will end here only. So we will see the example, one more example. As you can see that here the point of control is extended towards right, so it will extend further till it will not breach or retest. Here you can see that here this is the point of control, and it extends toward right, and this is it is retest again, and then it is not extend furthermore. So that's the importance of the point of control, and it is act as a, you can see that it is act as a support and resistance. So one more point of the volume profile is, so at the high volume nodes, the price tends to sustain for a longer period. So at the highest nodes, highest volume nodes, the price finds a difficulty to passing through these nodes, and in at the low volume nodes, the price can swiftly move. So this is also important point. So I think that's all about this volume profile. Then we will move to the next indicator. So I think we have a volume volatility stop indicator in this 1.2 also. We have covered this in 1.1. So it is same as the 1.1. This you can see here. The volatility stop indicator. So we will move to the next indicator. So next indicator is MS. It is called as a matrix series. So it gives the potential reversal of the stock. So if you observe that you have these are called as a matrix. So and you it works and you can see some red color dots and some green color dots. So it shows the overbought area and overbought, yeah, overbought area, and these are the oversold area. So these red dots are indicates that the price has come to the overbought area, and it is expected to reverse. So we can expect a short trade here. So it has a 200 and minus 200 or overbought and oversold area. So you can see here, you can see the red dot is formed and the price is also reversing. So you can find many examples of this indicator. And we should not trade based on a single indicator. We should check the confluence of other indicator also. So the next indicator is WAPI, volume accumulation percentage indicator. I think we should also cover this in the last 1.1 chart layout. It is same, the volume accumulation percentage indicator. It is a volume indicator, and it uses as a accumulation and distribution volumes. So we will move to the next indicator, that is our last KDJ indicator. So KDJ indicator, KDJ are nothing but the lines. So the black line is K, the blue lines is J, and the violet line is J line. Sorry, this is K, this is D, and this is J. So let me zoom it. So K and D lines are the stochastic lines, and the third one, the J line, is the measures the divergence of the D line from the K line. So when they converge to a single point, it indicates a possible trend. So here you can see that the J line is the all three lines are converging, and the J line is below from the both lines. So it indicates a bearish trend. And likewise, if here it is converging and the J line is crossing above, so it indicates a bullish trend. So here you can see that here the convert it is generating a bullish signal, and price is also going up. And from this, you have to also check the confluence of other signals also. So we have covered all the signals, all the indicators. So if you have any question, so please type in chat box. You can. That's all from my side.
Thank you, Rishikesh. Any questions from the audience for Rishikesh here? There's a question from Nilesh. Nilesh, what is that similar to OI buildup? If you could just clarify what your question is. Okay, no questions coming up. Thank you, Rushikesh, for explaining another set of charts by Mr. Jagan. Now we move on to our next presenter, Mr. Palani.
Thank you all.
Thanks, Rushikesh. We move on to Mr. Palani. Mr. Palani is another presenter of ours who belongs to the IT industry, who's from the IT industry. He is a country head at one of the leading IT companies in India. He's been trading for about 3 to 4 years now. He'll be taking us through key market structures right now. Over to you, Mr. Palani.
Thanks, Avinash. A very good evening to all of you. Let me know if you're able to see my screen. Avinash, can you please confirm?
Yes, I can. We can see
Okay.
your screen. Loud and clear. Yep.
So we have a very interesting subject today. And more or less a couple of times on Telegram channel, we have heard about this market structure Jagan sir keeps referring. And it's little curious to understand what this market structure is and how is it connected with our day-to-day trading. And also what is the use of this market structure. And before going into that, why we need to understand market structure? The intention of this session is to understand how the market works, why it moves daily in this way. And the last question, which is what the major participants are doing in the market. What are they doing now? So these are the three big questions that we are going to unfold in this session. And we will do this way. So first we will understand what is market structure, which is in terms of a simple layman's language of what it is. And then we will understand a little bit on the supply and demand. And then I will walk you through with a couple of charts where we will see the market structure in different time frames, a larger time frame, a smaller time frame, and what are the key takeaways from that and how we can use that in our day-to-day trading. And then we move into the three different market structures that we have: bullish, bearish, and sideways. And each one of them we will understand what it is in simple layman's language. We will have a couple of charts in different time frame to look at them and try to understand them, try to infer on how it can be used in our day-to-day trading. And then lastly, we will be focusing on the who are the big participants or the market movers, and understanding what the smart money is, who are this big group of people who are termed as the smart money, and what should be our strategy when we are doing in our day-to-day trading, how we have to align to the smart money. So this is what is the agenda of this session. So let me just kickstart with the first one, which is what is market structure. So in a very simple layman's language, it is the current state of the market. What I mean is that currently, if it is in a bearish mode, then you can say that it's a bearish market structure. Okay. Now, every one of us knows that the market works on the principle of auction. Okay. So as the auction process goes on, there is a change. There is a change that happens in terms of the market sentiment, or the psychological change that happens from being bullish to bearish or bearish to bullish. That is what is going to help us. When we understand and study market structure, then we are able to understand this shift or the change that happens in the live market. Now, when you understand this, that what's happening, you have an edge or you have an insight that what probably could be the next phase or the next move. So in your day-to-day trading, if you understand that currently you are in a bearish market, if the strength is very strong, it aligns you to plan your short trades and with other parameters, and it prepares you that you can go for a short trade. So that's how the market structure helps you. Two simple terminologies which we often keep referring: what is supply and what is demand. So in simple language, when we say supply, it's not actually a price. It's not like 37,500 is a supply zone. No, it is actually a series or a set of price which is close by and forms a strong zone, which is called as a supply zone. And it is believed that this is the potential point where there are a lot of sellers who are going to sell in that zone because they have multiple reasons to do so. It could be that they find the price to be overvalued, and that's why they are going to sell. And that's why the expectation is that when the price moves towards the supply zone, you can expect it to have some resistance and the price might come down. So that's what is a supply zone. And when we talk about demand, again, it's the same principle. It's not one horizontal line that says that this is the demand price where you will always find buyers. No, it's a series of price which is in that particular zone. It is whenever the price comes down, it touches and bounce back. It could be at 37,500, it could be at 37,450, it could be at 37,550. So that is a zone that is created where you have potential buyers who feel that there is a price which is below the actual value, and that's why they are there to support, and they will come in, buy and ensure that, or try to ensure that the price doesn't fall further. So that's called as the demand zone. So now we have understood what is a market structure in simple language, and then what is a supply and what is a demand. Now we will see the market structure in different time frame. Now, why are we seeing this? Because we all are scalpers, we understand, but we need to have a perspective or an approach which is beyond the technical indicators, because that will help you a lot. As I told you, having insights on the market structure is going to help you to understand later on, in a later stage, as Jagan sir is going to take more sessions, you will be able to understand whether this is actually a pullback, actually a retracement, or it's a reversal. All these things you will understand in the later part when we cover other subjects. But the foundation is the market structure. So it's very important to understand the market structure in different time frame, even though we might be trading in a we might be an intraday player, we might be looking at a 1 minute chart, and we might be taking trades. Now, if you look at this particular Bank Nifty chart, which is on a weekly time frame, you can see that it's a downtrend, and you can see that this is on a weekly time frame, means each candle here is collectively representing one full week. So just imagine the kind of data that is going in. So the higher time frame always represents a primary trend or the larger trend. So the larger trend here is that it's a downtrend. Now, if you have to say what is that I am getting out of it, the first thing is that this weekly time frame gives me an insight on the primary trend, which is a larger trend. Second, it also helps you to understand the price points where there is a rejection or there is a supply. So you can see here 1, 2, 3. So there are 3 areas where you see a price rejection. Okay. So let's move to a daily time frame. Now, do you see completely different thing here? So easy it was on the weekly time frame. Immediately we could say that it's a downtrend, but here you can see what? You can see it's a consolidation phase. For so many days, it's into a range, it's consolidating. So what happened here? The market went up, it consolidated, then there was a breakout with this candle, a nice big candle. Again, it went out, there is a rejection. And if you see on the left, if you just see on the left, you can see a lot of supply on this area. And eventually what has happened? The price was pushed down and now it's consolidating. So how your perspective or your insight changes with the time frame, that's the key thing. So in this time frame, what we observe is that the market is in a consolidation phase compared to what we saw in the weekly time frame. So that's why it's important to understand what is the market structure in different time frame. Now let's see in a hourly chart. Now again, so easy to understand that, it's in a channel. Again, it's into a range. And again, we can see that there are a couple of points here where it is facing stiff resistance. Then there are a couple of areas here where it's on the support side. And the same logic holds good here also, that it helps you to have a perspective of how the market currently, it's in what state. You might trade in a, say, 15-minute chart, 5-minute chart, 3-minute chart, but this helps you because you know that there is going to be a capped movement. If it is in a channel, then there has to be a breakout to have a significant move, right? Now, if it has been in this channel, I know for sure that there will be some support coming here, there will be some resistance coming here. So I know the moment that can happen is this range only. So that is the kind of insight we get when we analyze in different time frames. Now look at the 15-minute time frame. Now most of us always talk about exits. There is a lot of indicators to support us. But also, if you just look at this 15-minute time frame, again, this is Bank Nifty candlestick chart, 15-minute time frame, and see so nicely it gives you this insight. You can see there is a range within which the price is moving. Then you can see the price rejection happening here, 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 and 4 price points. And you can see why we say this is a supply zone. I have marked this red because this is a supply zone. Eventually, when the price moves up, it's pushed down by the sellers. And you can see multiple times. And what happens when it comes to this zone? It's taking a support once. It has taken a support here. It has taken a support here. Now, if you're going to trade next week, and if you see the price coming here, what will you do? Will you short it here? No, right? You will wait because you know that this particular zone has been respected 3 times, right? So this is the kind of insight that it will give to you if you look at the market structure. If this breaks down, then you know that a good support level has been broken, right? And if it's tomorrow, in the next week, if this breaks out, then you know for sure that the price was rejected 4 times and it has broken out. What does that mean? It means that the buying, the force of buying is so high that it could absorb all the selling in the zone, and hence it could break out, right? So that's the conceptual knowledge that comes out from this kind of a analysis on different time frame. And 15 minutes is very important because when you trade, and if you see, and if you want to take a decision, now in this case, as I told you, if it is here, then you have an option to keep this chart open and see if the price is close to this zone. And based on the formation of the candlestick, what kind of candlestick is forming here, if you see a strong big green candle on a 15-minute chart here, then obviously you know that there is a good chances of the price moving up. Obviously you will have the indicators to support and take the decision, but how to make use of this 15-minute time frame into trades, that's the point I'm trying to drive. So the key takeaways here are: 1, you can understand what is the trend. 2, it helps you to understand what are the supply zone and the demand zone and how you can play your trades. So as I said, once we are done with this, then we will get into understanding the 3 types or the 3 categories of market structure. So now the first one is the bullish market structure. So in a simple layman's language, we need to understand what is a bull market structure. Whenever you see higher highs forming and higher lows forming, then it actually denotes that you are in a bullish market. Okay. Now, the trend will continue if it continues to do that, provided you don't see lower low happening. Now I'll have some a chart to explain and walk you through. For example, if you look at this one, so now you can see that it's a uptrend. I put a 3-minute chart, the time that the time frame that we normally use to trade. So you can see how the market opened. It's a gap up, it moves up, and you can see a bit of unwinding, a bit of profit booking coming, and then again it goes up, again consolidation, then this whole piece of consolidation is done, and then there is a breakout, again it moves up, profit booking again. So eventually, if you look at this 3-minute chart, then probably you may say that, okay, based on this I exited, or based on this I might have taken some decisions, right? Now let's see, how do we know? I mean, after this point, after you saw the first candle and second candle, how do we understand that what's going to unfold in the coming minutes? How to do that? So here I have populated the data from OI Pulse, and this is for 1st of April. This chart was also for 1st of April, and this is on a 15-minute time frame. This OI data that you're looking is for futures, and basically what this helps us is, it lets you know that at the beginning of the session what has happened. So from this we know that there's a good amount of long built up that has happened. See the time frame, 9:15 to 9:45 to 10, you can see 47k approximately, and again that is followed up by 39k. What does this mean? There is a follow-up buying, right? In a 15-minute already positions have been built, and a nice sizable amount of position has been built, and that's why it's a bullish sentiment. So this is complementing to what we saw in the first candle, and we can see that there is a follow-up buying happening, and hence we can expect that it could be a trending day and it could be a bullish day, right? Now the second tool is again a data from OI Pulse, and here we are referring to the trending OI data. It's not complicated, it's a very simple thing. What we are doing is just picking up the change in put open interest and the one in call open interest, and a difference is taken. So you can see from this, the dotted line, what you can see is this difference is increasing. Now why is this increasing? Because you have the put OI which is increasing substantially from 41 to 60. Sorry, excuse me, there's a little bit of noise. 1 second. Excuse me, guys. Sorry for that. I think the neighborhood baby is crying, but I didn't want to get the disturbance here. So coming back to the OI data, this difference is increasing, and now you can see that the put writing is increasing substantially from 41 lakhs approximately to 62 lakhs. Now, what does this mean? It means that the market is bullish, it will not come down, and that's why a lot of puts are being sold. And that's why this is increasing. And you can see the call OI from 30 lakhs, it's dropped to 25. That means call OI, what was written, there is an unwinding. So indirectly what we say is that when call OI writing is more, that means it will act as a resistance, and when this is written more, that means you're saying that it will not fall. It's a bullish sentiment. So that's what is the interpretation. Why I'm bringing this? I'm just trying to tell you that how you can connect all of these things together with the indicators which will help you into your day-to-day trading. So what is the key takeaway from this slide? So one, we can see that if this value is increasing, that means it confirms again that the bullish sentiment is there and it is continuing. Second, it also gives me a view of the day high, which is getting broken. It's a very good indication, unless and until you don't have a strong buying, this will not happen. You can't keep on going every 15 minutes, the day high is getting broken, right? So that also says that higher highs are being formed and higher lows are being formed. Now, the same day, 1st April, but we are looking at a 15-minute time frame. Why we are looking at a 15-minute time frame? Because I told that you will get a different perspective when you do that. Now, do you see what is the difference? There is less noise in this. If you go here, you can see all of these phases, and and it might not be very easy to hold your position, or it might not be very easy to again buy here, right? But this kind of a 15-minute chart can help you understand what's exactly happening. Now, if you see here, the low is not broken. There is a price rejection here, but this low is not broken and it is getting supported again. So when you analyze the market in a 15-minute time frame, then this is the kind of insight that you will get. Now, this helps me to again enter here. Now you can see this is a nice consolidation that has happened, right? After this, there is a breakout. I can enter with confidence because the market went up and here there was a consolidation, which is like buying and selling happening, and finally all the selling is absorbed, and now there is a breakout and it is moving up, right? So this is the kind of insight that you will get when you look at this. So what are the key takeaways? One, I said the higher highs and higher low formation, which is when you look at the 15-minute chart, you will have less noise and you can clearly see if the lows are forming and they are higher compared to the previous lows. And second, the trend continuation. The second one is the bearish market structure. So as you're aware that when we say it's a bearish market, then you know that the lower, there is a series of lower lows forming, lower highs forming. And in a bear market, always the support is broken. In a bullish market, always you will see that the resistance is broken. So these are the two fundamental things when you are into the bearish market, then what you should look for, and when you're in a bullish market, what you should look for. Now here also the trend will continue. The trend will continue unless and until you see that a higher highs form. So continuously, if you see lower highs, right, lower highs, but if that starts to change and there is a higher high formation, then probably that is indicating that the trend is changed. I'm not saying that just one higher high formation is a change. There is a lot of other dynamics to it. So we are not at this juncture that everybody would be able to comprehend that. So it's a lot to do with whether it is a bottom formation, whether it is a what kind of candle pattern is formed, etc., etc. So for here, what we should understand is at a concept level, what is a bearish market, and we should be able to identify it. So this is the first example, which is on a 3-minute time frame, and this is for 13th of April. Now here you can see I have intentionally kept the previous days also. I didn't want to just focus on the 13th of April because in isolation it looks good that yes, it is a downtrend and it's an easy day to trade. But if you also carry the previous 2 days price action, then it clearly indicates that the price opened in a zone which is a supply zone actually, because it has got rejected 1, 2, 3 and the 4th. So the 4 times it has already got rejected. So if you the one in the earlier presentation where Mahesh was sharing this, just as we talk about the high and the what was the open, what was the close, what is the high and what is the low. So in the similar way, if you are able to see the market structure in a time frame for a couple of days, then you will be able to get this insight, which will help you to understand. So if the market has opened at this price, and if you know that it has got rejected 3 times previously, will you go on a long? Will you go for a long trade? Obviously not. You will want to wait and see. You would want to wait and see how the price is reacting when it is in this supply zone. And now again, I am switching to 15-minute time frame so that we have a better perspective. We have less noise and how we can use the interpretation. Now in the 15-minute time frame also, we can see that there is this zone where we have good supply or resistance, as I say, and then you can see the downtrend. Now here, if you see, this candle is a strong bearish candle. This is also a strong bearish candle. Then there is a green candle. But after this, you can see that this green candle didn't break the high of this. And also after this green candle, this red candle has come in, which is more like a not engulfing, but a good candle to cover largely the green candle, but it never broke this last swing high. So this is a kind of interpretation. This will make you understand that it's not a change in trend. Unless until this is broken, you can say that this is all weak. Whatever whatever pullbacks or retracement, whatever we call, these are all not sufficiently strong enough. And plus, if you see this morning 15-minute chart candles, and if you connect this, then you know that it is not broken this. It's not broken this, and that's why we can expect that there could be some resistance. We are now looking on something that has happened. So once you start looking at this 15-minute time frame in a live market along with the trades, then you will understand that how this 15-minute time frame is very powerful in terms of the reaction that it actually takes at those critical areas like the day low, day high, and the supply zone, on the demand zone. You can really learn a lot if you keep watching it on in a live market. Again, I'm going to use the OI data because just as we saw for the bullish market structure, here also similarly we have the data for 13th of April taken from OI Pulse and in a 15-minute time frame, and you can see the similar kind of a thing. Now I'll just go back. You can see that you can see the short built up, the size of that 62,000, 40,000. Here you can say there is a long built up. Right here there is a long built up and 36,000, right? But what is the LTP change? Just 5.7. What does this mean? So it's not able to move the price up. So you can see how much is the selling pressure. So irrespective of the fact that there is a good amount of OI, but I don't see a change, so I will not consider this as significant. So I will say that okay, 62. If you have to see this and this, 40,000 has brought the Bank Nifty by 142 points, and here 36,000 only 5.7. So it's not good enough, right? So what is the interpretation? It's a bearish sentiment, right? So if we look at this and somewhere here 15 minutes, so 4 candles, we are done with 1 hour. So by the time you're here, and if you're looking at that OI data, you know for sure that it is a very strong bearish day, because the initial positions that are taken are short build-ups and with significant size. Likewise, if we look at the trending OI data, and with the same logic of looking at the difference between the call and put OI, what we can see here is this is increasing and at a very quick pace. From 45, it has almost doubled, and it's 945. We are seeing here it has around about 43 lakhs, and the 10-15, it's already 95 lakhs. What does this mean? This means that the strength of that bearishness, how strong it is. And you can, and again, if this happens, obviously most of the time this will also happen, which is like it's continuously breaking the low, and that low is a very sensitive area. Whenever a low is broken, then it makes the market more weak, right? Now this is the kind of interpretation that you will have by the time you are 10-15 and that this is the state of the market. So you can accordingly plan your trades. The next candle, the next 3-minute candle, the next time when you get a signal in the indicator, then you are supported by this fact that what is the strength of the market, right? If it is bearish, then what is? If you continuously watch this, and if this 95,000 is going to be like 1 lakh and 1 lakh 10, 1 lakh 15, that means that the strength is growing on, the bearishness is more, and with the indicators on, it can help you to decide how long you want to be in the trade and how long you can carry it, right? And I'm telling you, we are saying indicators are all important. Our framework, which we are currently pursuing with all the charts, that is our primary heart of our scalping. What we are trying to see here is go beyond the indicators to understand the larger context and perspective, so that it helps you to take decisions, and also you don't make a mistake of taking a trade which is against the trend, or not understanding that the trend has changed, and then you are still stuck with your position. So this is just to make you or help you to take the right decisions. The third category, obviously the sideways, which nobody likes, and Jagan sir always says that even in the sideways, there is a good room for a trade and making money. And seriously, previously I used to always stay away from sideways market, but now with this advanced tool and all the indicators that we are providing, definitely I see it from a different perspective. So very easy to understand. So when we say sideways, then you know that it's into a range, and the the highs and lows, they are within that range. And then it stays along for a long time. And let's see some example. It's more easy to explain here. Now, for example, in this case, you can see it's in a particular range. So you have the day has opened, it takes support here, it moves up, then there is a price rejection, and then again it comes down, and this low is respected, and again it moves, and it stays within this range. So this is a more of a sideways market structure. So the benefit of understanding what it is, now you know that since it's a sideways market structure, I know that the moment is going to be capped. The moment the moment of the price is capped to this and to this, unless and until there is some significant development that happens in the second half, or when Europe opens, or some information flows, and then eventually this low is broken and the trend changes. Otherwise, when it is in this particular range, then the understanding is that you will not see too much of moment. You will have a capped up move and down move, and you can take quick trades based on the indicators, and you can plan your trades for shorter points, because you know that it's going to be oscillating between these two areas, the high and the low. So again, this is a 3-minute time frame, and this was for 12th of January. And as you can see, you switch from a 15-minute to a 3-minute, but you can see that it is in a range, and in a 3-minute you can see that you have opportunities, right? At this point of time, definitely our indicators will help us with a short trade, and we are able to take the short trade. I couldn't get the OI data because in OI Pulse we cannot go back to a month which is older than the current month and we can retrieve. So that's the reason I was not able to pull the data. But generally, in a sideways market, you will see that the call and the put are almost the same in terms of like the difference that we saw from OI Pulse, like 70,000, 60,000, 50,000. In those cases, it will not be like that. It will not be like that. It will be like 15. The difference between both of them will be hardly a couple of, for example, let me just show you. So now you saw 95,000, right? So there it will be almost same. So you can say that it will be, the difference will be like, say, 20,000, 15,000, 10,000, something like that. So with this, we are done with the 3 types of market structure. And now we will go to the last part, which is about what the participants are doing. So first and the foremost thing is that what do we call as smart money? FIs, DIs, and market operators. Now these are the ones whom we term it as smart money. And why do we call them as smart money? Because they have huge corpus of funds, money, right? They can, they are not worried and they are not tight on purse. They have access to all the information. So when I say access to all information, means all the information that the retail community doesn't have, all the information that is not in the media, in the public, they have access to those kind of information. So obviously, when anybody has information which is not known to the larger community, then they have an edge, right? So with that edge, they will play in the market. And that's why it's very important to understand that what the smart money is doing, because we will not have information on key things, like there could be a change in some policy and that is about to flow, but you will see the momentum in the market already happening, positions being taken, and we all witness every year, right, during budget day. So sometimes before budget, some stocks start going up. So all of this is what the smart money has access to, those information on what is the policy and which sectors are going to be benefited from that, and who are the market leaders in that particular sector, and then they will start putting money, right? And this the same holds good for bank nifty also. It's nothing but made up of banks, right? You have the top banks, so anything related to those banks is going to lead to a momentum in the bank nifty, right? So very important for us to understand this. And why? Because they can influence, they can manipulate, because they have both. They have the money and they have the information. So from our perspective, what are we supposed to do? We need to align to the smart money. So we have to understand that what the smart money is doing, whether they are bullish, whether they are bearish, and accordingly we should plan our trades. Accordingly, we should see to that we are aligned to the direction that they are. And how do we do that? So it's good to say that we have to do this, but how do we do? So we need to understand the FI and DI activity. So when I say activity, means what have they done today? So every day, at the end of the day, in the evening, late evening, you will get the numbers, which is in terms of FI has bought for X crores, DI has for sold this crores, and etc. So it's important for us on a day-to-day basis to see and understand what those numbers are, because that is nothing but reflecting the sentiment of what they carry of the market, because they are the ones who are pouring in the money, right? So if FIs are on a selling mode like they have been in this year, so it's an indication that they are withdrawing money from here. Okay. And if DIs overall have been in a buying mode for this year, then it's an indication that they are absorbing what the FI was selling. So it helps us to understand that today the market is more dependent on DI and retailers. Now this kind of an information can help you, because any day if you see the DIs have started selling, then what will happen? FI is selling, DI is selling. It's an interesting thing. Go back and see for some days it has happened, and then the market has fallen badly because nobody is there to absorb the selling. So when FI is selling, DI will buy, and they buy because they have already researched on which are the ones that they will buy during this time at a low price, which are the ones that they will buy, and they will buy and support the market, and they will again at some point of time they will sell. So for us, the point is to understand what's happening with this FIs and DIs, and that gives us the broader picture of the market sentiment and helps us in building our view of what can happen and what we can expect in the coming days and weeks. One interesting that has happened is on the retail participation. So when I say retail participation, in the sense that the retailers have started investing in the market, trading in the market, and just to give some numbers, around about 4 lakh demat accounts were being opened in 2019-20. So you can understand the size of that, and that went on to 26 lakhs. It's almost like 6 times of what the number of accounts that were being opened, and that shot up to 26 lakhs in 2020 and 21. So you can understand that how much of money is being pumped in by the retailers, and with the belief that they will be able to make more money. And with COVID as the context, there were many COVID traders that came in, plus because of the overall uptrend also that they saw after the market recovered, and with COVID dying down, more retail participation started. And recently, Nirmala Sitharaman, one of the quote which I wanted to share with you is that she said retail investors absorbed the shock of FI and FPI. So, somewhere in March, we had a phase where FI was selling daily. Okay. And people were people are expecting that the government might do something in the budget for the FIs just to stop this, but that didn't happen, and then eventually this is what was said, and it was said because on the ground actually retailers were pumping around about 10% of their income into the market. So this is just to give you some stats, and how this kind of an information is available across different tools in an NSE website, and you can have multiple sources for this. But the idea or the point that I want to bring in is that this will give you a perspective of what these big players are doing. So if you see the DIIs, and if you see this last column, which is like January 1st to April 12th, they are positive, right? Now, if you look at the same for the foreign institutional investors, and if you see from 1st of Jan to 12, they are negative. So you can see almost most of the part is absorbed by the DII. Now this is little different compared to the previous years, where we used to see a lot of money coming from the FIs. They used to stay invested, and they were positive, and that's why we had the good bull run before the COVID. Now this we can keep on seeing on a daily basis, because every day you will get this data, and this will, and on a cumulative basis, it helps you to understand. For example, this one, see, March 13 to April 12. Now eventually they, for the last 1 month, they have sold for this many crores, and for domestic DIIs they have bought in for 49 crores. So it's almost like the FIs are selling, and that is being absorbed by the DIIs and retailers. So that's how it is. At the below, sorry. So right in the below, you have this nice bar chart. And this bar chart is an indication of the retail community. Okay, retail communities monthly in the cash market, monthly volumes. Now you can see this is the average, right? This is the average, roughly around about here. And then you can see this bars all going up. So this is the addition. This is the participation which has got increased from this point, somewhere around Feb 20 onwards. You can see how it has increased. This is just to share with you on how the retail participation is helping the market stay afloat and absorbing a bit of the selling that is coming from the FIs. Any questions? Because I think we have a couple of minutes now, around about 10 to 13 minutes is there. So if any questions, please. And Avinash, over to you.
Yeah, no, thanks, Mr. Palani. I have a question from Mr. Nagaraj. Mr. Nagaraj wanted to know about how do we find out about a sudden price crash. In fact, I would just unmute Mr. Nagaraj here. Mr. Nagaraj, you're unmuted. If you want to elaborate on your questions, you could do that, please. Mr. Nagaraj, over to you. Mr. Nagaraj, you there? His question, Mr. Palani, is how do we find out if there's a sudden price crash? Because OI Pulse, it seems, will show it only after a specified period of time. So, for example, a 3-minute or a 5-minute or a 15-minute interval.
See, our indicators, which sir has shared, there are many of them. If I look at GMMA or GI, we are looking at 1 minute time frame. So it gives a clear indication. You can see a crossover happening. You can see the distance between this long and short index. You can look at the EMAs if there is a lot of space between them. So all of these are indicating the moment there is a crossover, and if there is a huge gap, assume that there is going to be a big down, or if it is going down, then assume that it's going to be a good downfall. So we already have those indicators which will help us understand this. So and moreover, it's not like it happens suddenly, right? If you watch on a 1 minute time frame, you can see that there is this long and short index are converging. So it takes time. They come close, they converge, and then you can see the crossover happening. For example, the long index is going down, for example. So in that case, you have time to understand. You have enough time to understand that now these two long and short are converging. Now it's about to have a crossover. So there's an ample amount of time. Plus you are supported with the data which shows you below what is the volume. So if you are on a 3-minute time frame on a bank nifty, and if you see a 50k volume, 60k volume, and now it has been, I mean, last couple of days we are easily seeing those 50, 70, 80k volume bars, right? So all of that is going to tell you that there is going to be a down moment happening. And once you see a down moment, then you have the other things to support. You can see the strength of that, right? We have couple of candles to see. We have ADX also to see what is the momentum. So if you're seeing the ADX going up, and if you see the crossover with a good gap between both the indexes, and ADX is up, then you can expect that further fall can happen.
Yeah, hi. I'm sorry, Nagaraj here.
Yeah.
Yeah, Pranit, see, actually, I mean, OI Pulse, I mean, we need to look into as what you told ADX and other thing. So we cannot be dependent only on OI data, right?
No. So as I said earlier, I want to make it very clear. Our fundamental framework of trading is based on the charts that Sir has said. So all the charts that we are going to use for taking trading decisions. What we are talking here is that we don't want to confine our thought process to indicators. We need to have a broader perspective and approach while taking a trade. So for that reason, it's important to understand the market structure and different types. Nowhere we are saying that we are only going to focus on OI and this. Okay. So I want to just clarify this again. I have already done that. So I'm saying OI is going to supplement your decisions. The first and the primary thing to fall back is your indicators. And why we are seeing on a 1-minute time frame? Because the simple reason is to identify a trade in that time frame. We are watching out Willy every now and then.
Yeah.
It's on a 1 minute. Don't know where the OI is coming into picture. But if you see that the Willy is at 100, if the Willy is at 100, then what do you want to do? You want to take a trade, right? For example, many people have said that so they have taken a trade when the Willy is down, bottom, and they have gone for a CE trade, a long trade, which they should not have done it, right? Why it happened? It happened because the perception is that whenever the price is down at the bottom, I should take a CE trade because it will go up, boss. But if the strength is so strong, if the bearishness is so strong, if you are having 60k, 80k, 70k volume bars of red candles, and your GMMA is already showing, your long index is also down on the GI, everything is indicating strong bearishness. Your ADX is also moving up. Now, in that perspective, if you look at the trending OI, it will tell you that the low is being broken. Your call and put OI again is increasing. That is also significantly increased. Like the one example I showed you, where it was from 45,000, it became 95,000, right? So it is just to supplement you. We just want that you carry this broader perspective for your trading, but the principle remains the same, which Sir has been improvising and evolving this chart to ensure that you can cover all the aspects for taking a trade, which is your direction, your volatility, your volume, so mean reversion, everything. So we should stick to that fundamentals.
Thank you.
Yep.
Thank you.
Thank you, Mr. Palani, for answering that question. Any other questions? Any further questions from any of the participants? Please. None whatsoever.
Hello, Aminash?
Yeah.
Can I add it now that there's no question? We have
Sure, Mr. Jagan.
We have 6 minutes more.
Yeah.
Just I want to touch upon one or two points quickly so that we finish on time.
Sure.
First, thank you all, the attendees. We know that we expected it won't be a very high volume because of holidays. Many people are traveling, and then we know that. But anyway, now we have this recording facility, and then it will be posted in the YouTube. So that is okay. That we understand that. Now coming to the to my own reaction to this presentation, 2-3 things I'm noticing. Number one, the quality of presentation, the content, the speakers, it is moving up every day. See, last presentation, everybody appreciated. It was too good compared to the thing. It is not about the people. We are experiencing, we are raising our standards. So the presenters this week know how it was presented last week. So they know that that is their floor. So they want to increase their standard. So there is a kind of effort. So the benchmark is rising, the quality is rising. I can assure you, in fact, 1 or 2 people commented in the group, even in the paid channels, you don't get this kind of professionalism, for sure. I mean, it's not that, I mean, it's not me who is presenting, it is all these volunteers who are presenting. And I will give you some very quick examples. I want to touch upon each of the presenter and the quality which amazed me. See, it is so much unique we have so much to give. We ourselves do not know how good we are. Then only when the time comes, when we are called upon to deliver, then we know our worth. And that is what I wanted to prove, that otherwise, we won't be introducing all these new volunteers. Now take Mr. Parni, for example, or our Lavanya, or Mahesh, or Rushikesh, yeah, even Avinash himself. Yeah, they are all first-timers. They all presenting this kind of thing. They would have made presentation, PowerPoint presentation in their own work, but not this kind of thing. Now, Mr. Palani sir, I just gave him 3 questions: how, what, and why. That's all what I gave him. Sir, you covered these 3 points. That is your presentation. So he did exactly. I didn't tell him anything. He sent this presentation. Just I told him, just add one more because you have 40 minutes to go. So to cover up the time management. Then the way he picked up that last point, please cover the smart money, I told him. And so much he has done in so quick time. I remember, I don't know, correct me if I'm wrong, Mr. Parani. I told you, I think around 11 o'clock or in the morning. No, not even 11 o'clock. I gave you the questions in the morning, 11 o'clock, 10:30. Now I told you to add this smart money chapter, I think around 3 o'clock, if I remember, or 3:30. And then now you have come up with this. This kind of speed, this kind of, research abilities, very amazing, really. This is a very strong point, and I really salute you for that. So much information packed in such a short time. So that is your own uniqueness. So going to Lavanya, for example, she gave a presentation completely different from what she presented today. So I said, look, we had a very short talk. Then I gave mostly few points, not even a big summary. She completely changed the ability to change her position. Then she quickly grasped what is required, that we are all talking about the market has got memory. It is not about something else. Then she has to connect with Mahesh's database and prove that why daily self-review is important. So that ability, not, for example, you have come and convinced that you are going to have a short trade. Suddenly you have to become bullish and you have to take a bullish trade, a call trade. Not many people can change swiftly. In the tip of the moment, you come with a predetermined idea, the market is going to fall, but the market is galloping ahead. Then you need that. I'm going to post some psychology kind of videos. I've already posted one in YouTube about how to handle our past losses. There'll be some special topics on psychology that I won't be able to explain. First, I'm not I know psychology, but I'm not a psychiatrist or a psychology professor or psychology professional. So in respect to trading, that is the one thing I'll be borrowing from others. I'll be posting. Please read them. It is very useful. I pick myself what really matters and I give it. Okay, this is second point. Similarly, quickly to finish, Rishikesh, the amount of detailed research, the very deep he has gone. Again, I gave at the 1.1 chart, I completely changed. Why I changed? Because I thought when we had the mock presentation yesterday, I thought it is too complicated and too detailed. I didn't want to make things complicated. When I say that, so I simplified. So I told Rudy, forget about this, present this. Between that was again 2:30. Then he has come up with such a deep understanding and do that. And when I say that I've simplified, I can hear your mind voice, Avinash. I can hear mind voice. Even this looks very complicated. The one revised presentation, but what I can assure you, it is like just like algebra. First we do algebra, when we see this derivative integration sign, it looks so complicated. 3 months down, it all becomes simple. 100%, I can tell you, once you get used to it, you will get a feel of it, it will become simple. So, Mahesh is not here. I never expected him. He will write his own script. He will going to publish his own indicator, but he has a time issue. His work is very demanding. So I actually thank him for that. And please, this database thing, it is only a starting point. It will become much better, much more refined, more user-friendly in a very few days. And thank you, Avinash. Wonderful, you have gone beyond the definition of the anchorship. You took more responsibilities, you followed up with everything, and very time management, excellent. I do not know, is it your first presentation of this type, or you are a professional yourself in this?
Hosting it for the first time. Presentations a lot been done, but yeah, hosting it for the first time.
Yeah, okay. So
thank you for the opportunity. Thank you for the opportunity.
Yeah. So we are all learning. I expect more volunteers to come. So these people have proved even first time they can deliver top quality, and this is what is excellence about. And one last word before we finish. Please make sure, unless you give 100%, this won't happen. The trading is a very serious game. And some people just, volunteer, a friend of mine, who said that some people are calling him and saying, sir, when are we going to start trading? When are we going to, start trading instead of this, going into all these things? This is the very wrong mind. This is my last comment. This is a very wrong mindset, because this is the mindset that really damaged us in the past. We just want to trade. We do not know why we are entering. We don't know. Then once you enter, we got caught. We know that something wrong. We are trapped. Then we don't know how to get out. We try to get out, waiting for hoping and hoping. It doesn't happen. Then we get out just frustrated at whatever loss, right? That is how the loss is built up. And that we cannot do the same mistake again and again. Unless we build a foundation. If you build a foundation on sand, the building will collapse. So you need to build a foundation in concrete. That takes time. So if you think that we are wasting our time in our learning, no. We have spent 20 years coming to graduate in an engineering college. And that salary, what you get, after that, you can make it in one day. We all know that if you are an expert. So please don't underestimate trading. It is also a profession like any other profession. It needs certain system, certain discipline, certain methodology, hard work and everything. So I am aware that some people may not have enough patience, but patience is a virtue here. So please be patient. Don't miss this opportunity. And after that, once we go into the trading strategy, nobody is going to explain these things. We will assume that you have already done and practiced. Okay. So thank you all. Thank you, Avinash.
Thank you, everybody. Good night.
Thank you, Jagat.
Have a great weekend.
Thanks. Bye-bye.
Bye-bye.